Welcome back, everyone, to the deep dive. So today we're going to try to get to the bottom of a pretty big question.
Yeah.
Could 2025 be the year we see stagflation make a comeback?
Uh-oh.
Yeah. Yeah. Oh, is right. For anyone who needs a refresher or maybe hasn't heard the term before,
Right.
stagflation is basically what happens when you get this nasty combination of a stagnant economy,
Yeah.
high unemployment, and inflation that just won't quit.
It's real triple whammy.
Yeah, you could think of it like trying to drive a car with the brakes on while the engine's overheating.
Oof. Yeah, that's a good analogy.
Not a smooth ride.
Not at all.
And the thing that makes stagflation so tricky is that the things you normally do to fix one problem can actually end up making the others worse.
Absolutely.
So it's kind of this economic puzzle that's really tough to solve. So in this deep dive, we're going to try to figure out just how likely stagflation really is in 2025.
Okay.
And we're not just going to speculate. We're going to be looking at some expert analysis, specifically a report that really digs deep into how potential tariffs could be the thing that sets it all off.
Interesting.
Yeah, and we'll link to that report in the show notes for anyone who wants to take a look. But the big picture here is that this isn't just some theoretical economic debate.
Right.
Understanding this stuff could have a real impact on all of us.
Absolutely. How we experience the economy in the coming year.
Exactly. So to set the stage a little bit, we need to acknowledge that we're not starting from a perfect economy right now.
Of course not. No.
We've already got inflation that's been pretty sticky,
Yeah.
hanging around that 2.5% to 3% range in both the U.S. and Europe.
Yeah. And that's persistent.
Yeah.
It's not just those temporary price spikes we saw a couple of years ago.
Right. It's deeper than that.
It's being driven by these ongoing cost increases in things like services, housing, wages.
Exactly. And on top of that, the global economy as a whole is slowing down.
Yeah.
The IMF, the International Monetary Fund, is projecting growth of just around 2.4% for 2025. That's not great.
No, it's not. And there are a number of factors contributing to that.
Yeah.
You know, high interest rates globally.
Yeah.
A lot of debt in many countries. And just the ongoing geopolitical tensions we're seeing.
Right. All that uncertainty is weighing things down.
It really is.
And then beyond all that, we've also got some deeper structural trends that we need to consider.
Okay.
Things like aging populations in many developed countries,
Right.
which can impact productivity.
Uh-huh.
We've also seen productivity growth stagnate somewhat in recent years. And of course, the transition to cleaner energy, which is obviously essential.
Absolutely.
But it does come with some costs.
It does.
So you put all that together, and the economic landscape already looks a little fragile.
A little shaky.
Yeah, exactly. So with all that as our backdrop, let's get to the heart of what this report is really concerned about.
Okay.
Tariffs, and specifically the possibility that we could see a return to more aggressive trade policies.
Interesting.
Yeah, so the question is, how could these tariffs actually be the thing that tips us into stagflation?
Right, let's break that down.
Okay, well, let's start with the most immediate effect, rising prices.
Okay, so the simplest way to think about tariffs is that they're basically taxes on imports.
Uh-huh.
So when a country puts a tariff on goods coming in from another country,
Right.
that extra cost often gets passed down the line, straight to us, the consumers, the businesses buying those goods.
Yeah.
And that shows up as higher prices.
And this report lays out some really specific potential impacts, which I thought were interesting.
Yeah, what do they say?
So the Peterson Institute for International Economics estimates that a 10% across-the-board tariff in the U.S.
10%, wow.
Yeah, so imagine that applying to almost everything we import. They say that could bump up inflation by anywhere from 0.5% to 1.5%.
That's a pretty noticeable jump.
Yeah, it's not insignificant, and the report points out that this would hit lower-income families the hardest
Oh, of course.
because they spend a larger portion of their income on essentials.
Right, necessities.
Yeah, so right off the bat, you're looking at potentially reduced buying power for a lot of people.
Right, and for the average listener, that could mean paying more for your everyday items.
Yep,
Groceries, your phone, clothes, everything.
pretty much.
The report also dives into targeted tariffs, especially on goods coming from China, like electronics and machinery.
Okay.
And those types of tariffs can really mess with supply chains,
Yeah.
making it take longer and cost more to get those products from where they're made to where they're sold. And that, of course, keeps inflation higher for longer.
Right, so it's not just the sticker price that goes up at the store.
No, it's not.
It's that the whole system of getting things to us becomes more expensive and less efficient,
Exactly.
which can just drag out the problem of inflation.
Exactly.
Now, what about how other countries might react to this? I mean, if we slap tariffs on their goods, they're not just going to sit there and take it, right?
You're absolutely right. They're not.
So what happens then?
Well, major trading partners like the European Union and China, they would most likely respond with their own tariffs.
Okay, tit for tat.
Yeah, exactly. Tit-for-tat tariffs on the goods that we export.
Yeah.
Things like agricultural products, tech innovations, chemicals.
Okay, so now American companies trying to sell those things overseas are suddenly facing higher costs,
Exactly.
which makes them less competitive.
Right, and this is where that stagnant growth part of the stagflation picture really starts to come in.
Right, because now it's not just prices going up here, it's our own economy starting to slow down.
Yeah.
The report even cites an analysis from the World Bank.
Oh, wow.
Yeah, suggesting that a renewed trade war between the U.S. and China alone,
Just those two?
yeah, could shave off 0.5% to 1% of global GDP.
That's a big chunk.
Yeah, that's a significant slowdown in economic activity worldwide.
And these aren't just abstract numbers either.
Right.
These things have real-world consequences.
Exactly. The report highlights that industries here in the U.S. that rely heavily on exports,
Like what kind?
things like manufacturing, agriculture, they could see job losses as their goods become too expensive for foreign buyers.
Okay, so now you've got higher prices here at home because of our own tariffs,
Yeah?
and slower growth and job losses because other countries are retaliating with tariffs on our exports.
It's like a double whammy, a 1-2 punch.
Exactly.
Not good.
Not good at all.
Now, the report also talks about something called supply chain reconfiguration.
Okay.
It's basically this idea of bringing manufacturing back to the U.S.
Oh, interesting, like reshoring.
Yeah, or relying more on countries that we have strong relationships with.
Okay, I see. Friendshoring.
Exactly, friendshoring. And on the surface, that sounds like a good thing, right?
Yeah, bring jobs back home.
Yeah, build more reliable supply chains.
Makes sense.
But the report actually suggests that this could also contribute to stagflation.
Really? How so?
Well, the idea is that forcing these shifts through tariffs can lead to higher costs and delays in getting things produced.
I guess that makes sense if you have to quickly set up new factories.
Right? Find new suppliers. All that takes time and money.
Yeah.
And we actually saw some of these inefficiencies pop up during the trade tensions back in 2018.
Oh, right. Yeah, I remember that.
So the report is basically saying we could end up repeating those mistakes. And of course, those increased costs and delays can really hurt productivity growth.
Which is a key ingredient for keeping inflation in check.
Exactly. If we're not becoming more efficient at making things,
Right.
it's harder to lower prices in a sustainable way.
Yeah, it's like running in place.
Yeah,
You're working harder, but not really getting ahead.
exactly. And the report points out that lower productivity growth can actually lead to higher labor costs per unit of output, which then feeds back into the inflation cycle.
It's a vicious cycle.
It is. And then on top of all that, you have all this uncertainty around trade policy.
Yeah, businesses hate uncertainty.
They do. If companies don't know what the future of trade looks like,
Right.
they're less likely to invest in new equipment or hire more people.
And that further slows down economic growth. And that uncertainty can make consumers nervous, too,
Oh, yeah, for sure.
leading them to cut back on spending as well.
So it's this whole cascade of negative effects
It really is.
that can lead to both higher inflation and a sluggish economy.
The perfect storm for stagflation.
Pretty much. Now, the report also looks at how these tariffs could interact with some of the other economic risks that are already out there.
Okay, like what?
So one major worry is the potential for energy price shocks.
Oh, yeah.
So imagine a scenario where we see a big jump in oil prices,
Okay,
maybe due to some instability in the Middle East or something.
right.
And at the same time, we've got tariffs on imported energy.
Ouch.
Yeah, the report calls this a double squeeze on prices.
I see, because energy costs affect everything.
Exactly. People would be paying more at the pump.
Yep.
Businesses would face higher energy costs,
Uh-huh.
which they would likely pass on to consumers in the form of higher prices for just about everything.
So you're getting hit from both sides.
Yep. And the report suggests this could be a really damaging combination. Now, what about the Federal Reserve, the central bank?
Right, the Fed.
How could tariffs complicate their job of trying to keep the economy stable?
That's a great question, because the Fed's main tool for fighting inflation is raising interest rates.
Uh-huh.
But if inflation is being driven by tariffs,
Right.
which is more of a supply-side problem.
Okay.
Rather than just strong consumer demand,
Right.
raising rates might not be as effective.
I see, because it's not like people are out there spending like crazy.
Exactly. It's that the costs of goods are being pushed up artificially.
Right.
So the report suggests that the Fed could find itself in a real bind.
Okay. How so?
They might have to hold off on lowering interest rates to fight this tariff-driven inflation,
Uh-huh.
even if the economy's slowing down,
Yeah.
which could keep borrowing costs high and make it harder for businesses and individuals to get loans.
So they're stuck between trying to control inflation caused by tariffs and trying to support an economy that's being dragged down by those same tariffs.
It's a tough spot to be in.
It is a real dilemma. And what about the government's budget? I mean, their report does mention that tariffs could bring in some revenue.
They could. Yeah.
Could that be a silver lining?
Well, the report estimates that these proposed tariffs could generate a significant amount of revenue,
How much are we talking?
potentially over $300 billion a year.
Wow. Okay, so in theory, that money could be used for government programs or to reduce the deficit.
In theory, yes.
But,
But the big catch is that those retaliatory tariffs we talked about earlier,
right.
those could actually make the government's budget deficit worse.
How so?
Well, fewer exports mean less economic activity overall
Mm-hmm.
and potentially lower tax revenue from other sources,
I see.
plus higher borrowing costs potentially driven by larger deficits and ongoing inflation.
Right.
Those could eat into any gains from the tariff revenue.
So even that potential benefit isn't a sure thing.
No, it's not. It's a very complex equation.
It is. Now, to be fair, the report does mention a few possible upsides to tariffs.
Okay, there are some.
Yeah, some limited ways that they could have a positive effect.
I'm curious, what are those?
So one point they make is that some industries here in the U.S., like steel and car manufacturing,
Okay.
they might actually see a temporary benefit from having less competition from imports.
Okay, so less competition could lead to more domestic production.
Exactly, and potentially some job creation in those specific sectors.
Okay, so a localized boost for those industries.
Right.
What else?
Well, they also talk about the idea of strategic de-risking.
Right, yeah.
So the argument there is that by reducing our reliance on supply chains from certain countries, even if it costs more in the short term,
Okay.
we could end up with a more resilient economy in the long run.
So if we're not so dependent on a single source for critical goods,
Right.
we might be better able to handle future disruptions.
Exactly.
But as we've discussed, that comes with some pretty immediate economic pain.
Yeah, it's a trade-off between short-term pain and long-term gain.
Right.
And it's not clear that the pain is worth it in this case. And then finally, the report briefly mentions the possibility of policy adjustments.
Okay, what do they mean by that?
Well, it basically suggests that if stagflation really takes hold, central banks might have to kind of rethink their approach
Okay.
and potentially prioritize supporting economic growth, even if it means accepting higher inflation for a while.
So basically choosing between two bad options.
Yeah, kind of a lesser of two evils situation. But the report warns that this could damage the central bank's credibility.
Yeah, I could say.
And could even lead to inflation becoming more entrenched in the long run.
So even the potential solutions come with their own set of risks.
It seems like it, yeah. So putting all this together, what does the report ultimately conclude about the likelihood of stagflation in 2025? Especially when we factor in these potential tariffs.
Okay, well, the report gives us some pretty specific numbers.
Okay, lay it on me.
They estimate that the baseline probability of stagflation in 2025 without these proposed tariffs is somewhere around 20 to 25%.
Okay, so not insignificant, but not a certainty either.
Right. But if those 10% universal tariffs and the China-specific tariffs are fully implemented, that probability jumps to 30 to 40%.
Whoa. Okay, so that's a big jump.
It's a significant increase in risk.
Yeah, and it gets even more concerning when we look at a worst-case scenario, right?
Absolutely. So if those tariffs happen at the same time as a sharp increase in oil price.
Like above $100 a barrel.
Yeah, and the Fed feels like it has to delay cutting interest rates because of that tariff-driven inflation. The report estimates the odds of stagflation could climb as high as 50%.
Wow. A coin toss, basically.
Exactly. It becomes a real toss-up at that point.
Okay, so those are some numbers that should definitely make us pay attention.
Yeah, I'd say so.
Now, finally, the report does touch on how different parts of the world might be affected by all of this.
Okay, so how does it break down regionally?
Well, the report indicates that the U.S. is likely to be hit the hardest by stagflation in this scenario.
Okay, why is that?
Well, largely because American consumers buy so many imported goods,
Yeah.
and also because of the political pressures around maintaining those tariffs, even if they're hurting the economy.
Okay.
The Eurozone is also seen as being pretty vulnerable,
Yeah.
especially to the fallout from a U.S.-China trade war
Makes sense.
and to inflation and energy imports.
Right.
And then for developing economies, the picture is a little bit more mixed.
Okay. How
So countries that rely heavily on exports,
Okay.
like Vietnam and Mexico,
Uh-huh.
they could face slower growth, while countries that produce a lot of raw materials, like Brazil, they might actually see some benefits from potentially higher commodity prices driven by inflation.
Interesting. So some winners and losers depending on where you are.
Yeah, it seems like it. So to kind of sum up this whole deep dive,
Okay.
the expert analysis that we've looked at today really suggests that these proposed tariffs,
Yeah.
they could significantly increase the risk of stagflation in 2025.
Yeah, it paints a pretty clear picture.
Yeah, they could directly cause inflation, spark damaging trade conflicts, and worsen some of the economic weaknesses that we already have. And while there might be a few limited benefits here and there, the overall outlook is for a much more unstable and uncertain economic environment.
Yeah, the report makes it clear that these tariffs are a bit of a gamble, a high-stakes gamble that could really increase the odds of a very challenging economic period for everyone.
Well, this has been a really important deep dive into what could be a major economic challenge on the horizon.
It really has.
And as the global economy navigates this very politically charged time, staying informed is more important than ever.
Absolutely.
So on that note, here's a final thought for you to consider. Given what we've discussed today, what steps might you take personally or professionally to navigate a potentially stagflationary economy?
That's something to think about.
If you found this discussion informative, please like, subscribe, and share this channel to get daily discussions on a current economic topic.